what concerns me more than anything is that you have the whole globe awoken to inflation, into geopolitical issues, into, half the refineries in Europe won't take our orders or are reluctant to do it because they're concerned about keeping the lights on with the energy problem into the winter. And all of the refineries here in the US are running at max capacity and are 90 days out. So when you talk about premiums that continue to escalate in the retail market, that's true. But what's even more frightening is the fact that from the COMEX to the London Metals Exchange to the ETFs, where you're seeing a continual, every single day, drawdown of silver by the authorized participants at SLV, the biggest money in the world is pulling their metal off the exchanges, getting it out of harm's way, removing counterparty risk. And these are the epicenters of where the bars that are ground down into shot to make the planchets, to make the coins come from. And so if you can't get the bars from the very, very top, and it's already tight as hell in the wholesale market, in the retail market, heck, $7 over spot is cheap for a 1 ounce coin these days. And there's something that makes it say, hey, gosh, I need some gold and silver. It's already so hard to get right now, Chris, that I think it's going to define this market. And I would venture to say that you got about a week or more, maybe 10 days before, if you're not buying something right now, you will not get product into 2023. It'll be into 2023 before you get it, because everything starts to slow down around Christmas time anyway, and stuff is running by and large at a delay right now, 1 to 2 to 3 weeks. It's getting tough, it's getting tight, and I don't see it getting better, honest to God. All of a sudden, these premiums are getting out of control. And is it getting out of control, or is it just the market's way of saying that the price that is quoted on COMEX is just flat out wrong? And I'll tell you, if price were a determinant of demand, as it should be in a fairly traded market, silver would be $100 an ounce or higher. And it would have been that way for a long time. And, you've been right. But the manipulation and the suppression of the silver market has been extreme. I guess what I would say is different through all the time that you've been talking about this, and I've been talking about it, is the positioning of the commercial banks that are now long in the futures market, is the drawdown in physical supply. And I guess who in their right mind would want to be short in this market when the nickel market issue debacle in the London Metals Exchange in March showed just what can happen? So maybe, just maybe, the commercial banks have set a trap for the managed money who continue to go short. And maybe as prices rise, they won't come in and short the price. And price will become more a reflection of supply and of demand. Because right now, there's a disconnection there. And demand is well outpaced the supply. And you wouldn't know it by the price. And that's what's masquerading really what the true reality of what this market's all about right now. The biggest money in the world, or the industrials, or the hedge funds, or the family offices, or the sovereign wealth funds, they're drawing down supplies well before that moment happens. And you can see, it was at 120 million ounces or so at Silver Squeeze. We're down to 34 million. We saw 37 million delivered to India in the month of August alone. We've seen the London Metals Exchange deliver like 45 million ounces in the month of September. And that's 8 million ounces, almost 10 million ounces, even more than that. 11 million ounces more than the price setting mechanism of the world has in the registered category. And if you take, I didn't see what it said, but last week, if you took the registered and the eligible and put it together, there was 218% more paper than all the silver inside the COMEX. So, you're talking, if you threw the eligible in there too, 1 out of every 2 would get paper settled, or 1 out of almost every 3. At the 1,800% paper to physical discrepancy, 1 out of 18 would get their silver, the rest would get cash settled. We're almost at that rate. If you look at how the silver ETFs keep bleeding quietly, millions of ounces a day out the back end, the big money is front running an event just like that. And it has to happen. The laws of supply and demand have to come into play at some point, Chris. If it's coming out of the ground at 7 to 1 in its relationship to gold, but priced at near 90 to 1, at some point, that has to reflect reality. And I think that's kind of why you're seeing the drawdowns the way you are. I've never experienced anything like this. You know, when you and I started talking about this in 2009 or 10 or 11, I don't remember what year it was, a long time ago, when we talked about what happened in 2008. In 2008, there was a defined beginning and a defined end, and this has just been a slow bleeding. And that's why I've been talking about it for the last 2 years. And I got a lot of crap. And you and I talked about this offline, like, people are, you probably shouldn't say that, or people might not believe you, or a lot of people were saying that to me. You're full of crap. I can buy it at SD. And I was never saying that. What I was saying is that I could see the trend happening, that it was used to be getting clients was 100 times harder than getting product. It's 100 times the other way right now. And I could see that happening. So if it's happening this much and you're seeing a reporting of a massive drawdown from all of these places, in 2011, you could argue everyone was buying it because it was going to 50 and everyone thought it was going to go much higher. In 2016, everyone was selling it, and there wasn't really, no one was buying it. So I don't know that they had to have massive inventories on Comex. It had very little demand at all, at least from a retail perspective. And when you look at what's happening right now, to me, what is different than any time in my entire career is that my entire life, Chris, the United States was the place to be. Everyone wanted to invest in the US, and precious metals were an afterthought. That's not the case anymore. And I think the world is awoken. Look what happened in the UK. Look what's happening in Europe with riots everywhere. Look what's happening in Japan. Look what's happening everywhere. Record high inflation all around the globe. There's people are concerned and waking up to this for the first time. So for the first time in my career, I think you have a global concern and a global awakening that fiat currencies are being destroyed and inflation is killing people. And after coming out of prolonged lockdowns and all of these things that have created anxiety and divisiveness and anger and stress, when you see record inflation on top of all of it and supply chain distortions, people are looking for the very first time, waking up. And it's still a very small amount. Like I say, the pimple on the elephant, but that alone has enough to wake people up. Now, I guess more than anything, what concerns me more than anything is this is a coordinated drawdown, not just on the COMEX, it's the LME and it's the ETFs. And that happens as the prices collapse. So it shouldn't be that way. And what is happening is betraying the price. What is happening is what the biggest money in the world always does. They front run the problem, and they're using the rhetoric and the price to reposition before everyone figures it out.